Okay, now we've assessed our risk, and now it's time to either buy or sell our investment. So, when we're looking to buy or sell an investment, there are different types of orders that we can enter. So, one of the first ones is the market order. It means I want to buy this immediately and I want it filled. So, not really concerned with the prices. So, I want to buy 100 shares now at the market price. So, go get it. Um, Now, this is not the best way to enter a buy or sell order if it's a very thinly traded stock. If it doesn't do a lot of volume, this is not the best way to do it. But if it is um, a stock like Microsoft, which trades millions of shares per day, then this would be perfectly fine in order to fill your order. Okay, my preferred method of buying and selling is the limit order. Okay, I get to decide the exact price that I'm willing to buy or sell at, and I can put those in at any time during the day. Okay, so it could be 2 o'clock in the morning. I decide I want to pay this value for a stock, and I can put the buy order or I can put the sell order in at any time, and I can mark how long that order is going to stand in the system, and I'll explain those later in the video. Now, a stop loss order. Let's say I've already bought the stock. Let's say I bought it at $20 a share. I'm hoping it's going up to 30. Okay, but I'm not willing to take more than a dollar loss. So I'm risking a dollar for a $10 of reward. Okay, so if I bought it at 20, that means once it hits 19, I'm out. Okay, I'll move on and try and find a better trade somewhere else. So a stop loss order means once that stock trades at $19 a share, the computer is going to enter in a market order to sell just to get you out of the position. Okay, now it doesn't mean you're getting out at 19. It means you're getting out at what's the highest available buy price, and that could be like 1890, 1895, all depending on how thinly the market is trading and what's going on. Now, a stop loss limit order. Okay, these I don't feel are as handy, but what would happen is if under that same scenario, I bought at 20, but I'm only willing to take a dollar loss, so I'd put the stop loss limit order in at 19. Once the stock trades at 19, the brokerage firm is going to put in a limit order to sell at 19. Okay, now if the market's not willing to buy at 19, your order could just sit there at 19 and not get executed and not be out of the position. So, not it's easier to figure out exactly how much you're gonna lose on a trade, but it doesn't guarantee that we're going to be out of the position. Okay, now a day order. So, like I said, we get to pick how long the trade's in the system. Typically, when I put in a limit order, I put it in as a day order. That means I've got my buy, I've got my sell order in. If nothing happens by 4 o'clock when the market closes, then the order is just going to be canceled. And I'll get an alert that says nothing done on your order. Now, good till canceled means no, I really want to buy at this price, or I really want to sell if we ever get to this price. And I'm going to leave that order in the system until I go in and cancel it. Now, you can set a date or you can go in and manually cancel it if you don't want to execute the position. Okay, now there's other types of parameters you can put on a trade. I usually don't use these, but what it's called is a fill or kill order. So sometimes you can put in an order to buy 100 shares and the stock trades at that price, but only 20 shares trade. So 20 is better than nothing for me. I'd still have the remaining order to buy 80 in, even if the market continued to trade up higher. But a fill or kill means if the entire position, if I wanted to get the 100 position, if that wasn't filled, then the order is going to be canceled. Okay, so even though you got the 20 trades, 20 shares, they cancel the trade. Now, immediate or cancel is a time parameter. So if I do not get the fill, meaning I bought the shares or sold the shares, if I don't get it within a certain time frame, which is pretty quick, then the order is going to be pulled and it's going to be canceled. Other types of parameters you can put is you can put the order in to only be effective on the open, okay, or only be effective on the close. Now, the open and the close are two parts of the trading day that are very volatile. So these I don't usually play around with, but when the market opens, there's a lot of uncertainty. After about a half an hour or an hour, then the market kind of knows which direction it's going to go in. So that's why I don't usually trade at the open, although because I'm not an active trader. When I was actively trading, the times I really would trade would be on the open and the close because they were very volatile and things moved around a lot. Okay, so I can see the appeal for some of trading on the open or trading on the close, but for me, that's not really what I do anymore. Okay, now once I've decided how I'm going to put in the order, there's the decision that has to be made. Do I want to do this in cash, which means only what's available in my account can be at risk? Or am I so sure of the trade that I'm willing to borrow money from someone else? Now, there's a higher chance of reward with a margin purchase, but there's also a higher risk of loss because not only could I lose the money that I put in, I could also lose the money that I borrowed to make the purchase. So cash is a safer investment. Margin is when you're looking to get more aggressive. Um, Now, another thing that you'll hear is round lots. Round lots means an order of 100 shares, okay, or a multiples of 100 shares. So if I purchased 200 shares, that would be considered two lots or 200 share positions. An odd lot means fewer than 100 shares. Now, I trade a lot in odd lots because I'm just dealing with smaller positions. Like if I'm going to get a round lot, it might take me 5 weeks to get that position by buying 20 shares at a time. Okay, odd lots are typically what's purchased by a small time investor like myself, and round lots are what's usually purchased by more professional traders or more seasoned traders. Of course, your fund positions trade in 1,000 share positions.